I'm going to explain about the project that we have. This is the accounting project, and in this project there are a number of transactions that you can see here. The transaction number 1, 2, 3, and so on. And we have different transactions which are very important in accounting. And we have a total 26 transactions. So one by one, I will start from the first one and will make a journal, then ledger, then trial balance, then profit and loss account, and balance sheet. So how to do all these things in a systematic way that I'm going to explain in Microsoft Excel. Right. So first is the first one is the transaction number 1. The owner of the business name is the RJ Private Limited. He has bought some of the amount that have brought here in the business. So first of all, that we should know that the owner of the business have a one account in the bank, and the bank name is the Scotia Bank. And this company deals in electronics item and provide repair and other services as well to the client. So first transaction is that he brought cash in hand $50,000 and bank balance 314 to start the business. So what will be the journal entry for this? So journal entry for this will be the cash account debit, right? So cash account debit with the 50,000 to Scotia Bank. So cash account debit, and Scotia Bank is like the bank account is also increasing. So that will be Scotia Bank. So how much money they are taking? So money is like $340,000. So here I'm just going to type to $340,000 here. And who? What is the name of the owner? This is RJ's. So I'm just going to write RJ's capital account. So amount here that will be so $390,000. So narration will be the company started a business with the cash and bank balance. So we know that the cash is what? Cash is a real account we can see and touch. So debit or what comes in, and this is the current assets which is increasing in the dollar value. And second is the Scotia Bank. $340,000 has brought in by the business, right? And this is a personal account. If we talk about the personal, real, and nominal, three types of accounts are there, and this is the personal account. What is the rule for the personal account? Debit the receiver, credit the giver. So in this case, the bank is receiving money, right, from the owner. So this is also one of the current assets, and it is also increasing. Second is the last one is the RJ's capital account, which is also known as the equity account. So $390,000 is brought by the owner, means the capital which is invested by the owner in the business is known as equity. Sometimes we say capital. So this is when the name of the person comes in any way, that is known as the personal account. So personal account rule for the personal account is debit the receiver, credit the giver. So in this case, that RJ is the owner of the business and giving money to the company, right? RJ Private Limited company. So credit the giver is owner equity, and once the owner equity is increasing, we will credit it. So this is the first transaction that we have completed. Now second transaction that we have, RJ Private Limited enter the leasehold agreement with the landlord to rent the office space for 6 years, and company spent $60,000 to make overall improvement on the building on several aspects such as wall, ceiling, fixture, lighting, carpet, etc. And he made this payment by check. And the useful life of such improvement is expected to be 10 years. So what it means? It means that the leasehold improvement, if that becomes the assets for the company, he has spent some money on that. The $60,000 that is spent on leasehold improvement. So 60,000, that will be one will be the debit and one will be the credit. This is because of the double entry system in accounting. So here, so what is coming in the business? The assets is increasing. So it means leasehold improvement account debit 60,000. And what is going from the business? The money is going from the bank. So Scotia Bank. So Scotia Bank account is credit 60,000. Scotia Bank is a personal credit the giver. It's a current asset which is decreasing. So this is the second transaction that we have completed. Now move to the third transactions. On December 31st, amortization of the leasehold improvement that will be $60,000 divided by 6. Why that I have done this one, like divide by 6 means, so 6 years of the leasehold space, that is the agreement, for 10 years of expected life of that improvement, whichever is less that we calculate, not 10 years but 6 years, right? So whichever is less, that is the 6. So $60,000 divided by 6 is equal to $10,000 per year. So now we are going to post this transaction in account. So what we will write here, we will write amortization expenses account debit. So amortization expenses account debit, that is $10,000, to accumulated amortization leasehold improvement, right? So the 10,000 debit and 10,000 is credit. So in this case, you can see that amortization is $10,000, which comes under the nominal because this is the expenditure, which is a non-cash expenditure of the company, right? So leasehold improvement is there. Always we will consider this is amortization, not a depreciation. This is amortization. And the value of the assets is going down year by year. So we know that the improvement is real, we can see and touch. So credit what goes out, and this is the fixed assets. The value of the fixed assets has gone down. The improvement he has done like $60,000. Next year in the book value, that will remain the $50,000. Now the fourth transaction we have here, very small amount of leasehold improvement of 3,500 is recorded as an expense in the accounting period, and payment made by cash and falls under the painting and building repairs. It means if there is no significant expenses, not a big expenses, very small amount of expenses that we cannot add or we should not add in the leasehold improvement. So in this case, what I'm going to do, instead of writing amortization, I'm just going to write here painting and building repairs account. So I'm just writing, so painting and building repairs account, that we can see like 3,500 debit and 3,500 credit. So what will be credited here? We know that this payment is made by cash, so to cash. So cash is real, we can see and touch cash. So the value of the cash in the dollar is decreasing, so we will write it here, and the assets value has decreased $3,500. Now the next transaction is the fifth one. So fifth transaction is saying that rent of the building is paid for the whole year, that is 2,000 into 12, 24,000 by check. It means rent of the building account debit to bank. So this will be the next transaction. So I can enlarge a little bit. So here that fifth transaction will be rent of the building. So rent of the building account debit. So how much is the rent of the building? It's at 24,000 for 1 year. That will be on the debit side as well as on the credit side. So on the credit side, how this payment is made? This payment is made by check. So that will be Scotia Bank, right? So this transaction is completed. Now we have the next transaction. So transaction number 6. So we have sixth transaction, which is here. So from the sixth transaction to 16 transaction, most of not 16, it's 11 and 12. Most of these transactions are related to the fixed assets, which is known as the tangible assets of the company. Okay, so let's say transaction number 6 is saying that on 10th of January, the company purchased 5-year-old truck for business, and the value of the truck is $35,000, and payment is made by check from the Scotia Bank. And the useful life of the truck is assumed the 7 years from the date of purchase. Now, in this case, what will be the journal entry? So, journal entry will be the investment is made by the company, the fixed assets, the truck, right? We will never write the purchase account debit to bank. No. Why? Because when we are going to write a purchase account debit to check or to bank, it means that is the goods. A goods means that you are buying for selling. The truck is that you are not buying for selling. This trucking buying selling is not your business. In RJ Private Limited, this company is dealing with electronic items and repairing. Okay, so truck they have bought for us maybe for the business of the company for running smoothly. So now, in this case, we definitely will write truck account debit to Scotia Bank. So in this case, I'm just going to write here name of the assets that we have bought, our company have bought. So that is truck account debit to Scotia Bank. So don't write a check over here. Just write the name of the bank, Scotia, right? So Scotia Bank account, you can write it here. So what is the amount here? The amount is the value of the truck is $35,000. It's very simple. The one will be on the debit side and one will be on the credit side. And for the explanation that you can see the real and personal account, it is already given. Okay, so next transaction is on 20th of January. The company purchased furniture worth $15,000 and the payment is made by check. It means furniture account debit to cash. Very simple, straightforward, right? So furniture account debit to cash. I'm just going to write here furniture account debit to cash. Right. So in this case, the furniture account, what is the amount for the furniture? It's a $15,000 here on the debit side, as well as 15,000 on the credit side. So seventh transaction is completed. Now eighth transaction we have here is the payment in January is made, and the company purchased a photocopier. A company purchased photocopier machines worth $75,000, and the payment is made by check. So useful life of the machine is estimated 10 years with a salvage value of 5,000. This is the additional information which is given. Now, what should be the entry for this? The entry will be the photocopier machine, or you can write a machine or photocopier machine. It's upon you. So better to write the photocopier machine. And how the payment is done? Payment is done by the check, and we know that Scotia Bank is the bank which is operated by the company. So photocopier machine account debit to Scotia Bank. So I'm just going to write here photocopier to Scotia Bank. Right. So what is the amount for this? Amount for this is that is $75,000. Right. So next ninth transaction is saying that on January 25th, the RJ Private Limited purchased 5 machines with a cost of $50,000, and we also pay 1,000 for the shipping cost, 2,000 for installation, labor cost 1,000, insurance and duties 1,000. So total useful life of all the machines is estimated for the 10 years. So in this case, at the time of buying some machines for the company, you need to add all the things, right? So why you're going to add it? You are going to add it, or it means you are going to capitalize it. So we capitalize all the costs required to get assets ready to intended use. So total cost will be 50,000, 1,000, 2,000, 1,000, 1,000. That will be 55,000. That will be the total amount, and the payment is made by check. So in this case, so machines account debit to Scotia Bank, we can write it here. So machine account debit to Scotia Bank. So machine is here 55,000 to Scotia Bank, right? So next we have the 10th transaction. On 5th of February, 500 is paid by check to ATI Truck Repair for the truck services. It means these are the general expenses. So for these expenses, we can say repair and maintenance expenses. So repair and maintenance account debit to Scotia Bank, $500 that I'm just putting out here. So I'm just going to write repair and maintenance. $500 here. And how that company has paid? So company paid this by check, so to Scotiabank. So $500 that will be on the debit side and 500 on the credit side. So the repair and the maintenance is expenditure of the company, and all expenses and losses are debit, and this is expenses are increasing. And Scotiabank is a personal account. Now we have the 11th transactions in front of us. So 11th transaction is saying 11th and 12th both, right? So on March 10, RJ Private Limited made the following expenditure related to the PPE, so property, plant and equipment. Renovation to group of machine costing $20,000 to secure the greater efficiency in the production. I have bolded why. When the money is spent on the assets, so that the productivity should increase, efficiency that will increase, so definitely, so that kind of expenditure will be considered as investments in the business. And the second is the continue frequent low cost repair expenditure, $5,000, and broken gear. These are the minor expenditure. So minor expenditure, we will say 5,000 plus 2,000, 7,000 are the minor expenditure. So now for the next 11th transaction, that will be $7,000, right? So repair and maintenance to Scotiabank. So repair and maintenance to Scotiabank. So repair and maintenance, how much is the amount? Of $7,000. Right. For next one is the same, the $20,000. That renovation for all the machines is done. Right. So it means machine account debit to Scotiabank. The payment is made by check. So in this case, the 12th transaction will be machines account debit. So this is machine account debit. The amount is $20,000 on the debit side, as well as 20,000 on the credit side, and the payment is made by check. So we will write Scotiabank. Now the 12th transaction is already done. Now we come to the 13th transaction on February 6. Purchase goods from Best Buy 9,500, and the full payment is made by check. So it means now we are going to buy some goods. What is the meaning of goods here? Goods mean all the commodities, all the items that you buy for selling. That is known as goods. For RT Private Limited company, they are buying some electronic items. So maybe the laptop, maybe TV, maybe computer, maybe mouse or a keyboard set, or maybe headphone or Bluetooth, right? These are the electronic items that RT company is buying from the Best Buy for selling purpose. This is known as goods, right? So purchase goods from Best Buy 9,500, and the full payment is made by check. So purchase account debit. We don't write a goods account debit. Never. If you are going to buy it, we write purchase. If you're going to sell it, write sale, not goods. So in this case, purchase account debit to Scotiabank. So the 13th transaction will be purchase account debit. So what is the amount for this? The amount is $9,500 on the debit side and 9,500 on the credit side. So purchase account debit to Scotiabank. Right. So this is the transaction that we have completed on 14th transactions. On February 7th, the purchase goods from Samsung company $1,500, and the full payment is made by cash. Now some of the article is taken from other supplier. The supplier is the Samsung company, and $1,500 was spent, and the payment and is made by cash instead of check. So now it means purchase account debit to cash. So now the entry will be purchase account debit to cash for the 14th one. So I'm just going to write it here, purchase account debit. So the amount is 1,500, purchase account debit to cash. So on the credit side, we will write it 1,500 as well. So next transaction is the 15th transaction. So 15th transaction is saying that on February 9, purchase goods from Best Buy on credit. So $70,000 goods were bought by the company RJ Private Limited. Yeah, right. That is on credit. On account mean on credit. It means that we have not paid. RJ Private Limited has not paid any payment to the Best Buy. So in this case, when the cash payment is not done, name of the party we have to write it, right? So in this case, so Best Buy, and there are two elements in this transaction. So what are those two elements in this transaction? The first one is a purchase, and second one is the Best Buy. So purchase of goods. So purchase account debit. So what is the amount? Amount is $70,000 to Best Buy. Don't write just Best Buy. Always write account payable. Accounts payable. Right. So in this case, that we're going to write here $70,000 Now the next transaction here is the 16th transaction. So 16th transaction saying on 20th of February the payment is made, right? So payment check is given to 30 of $33,000 to the Best Buy, referring to the transaction number 15. So referring to the transaction number 15, I mean out of $70,000, $33,000 is paid by check. So it means the payment is done. So if the payment is done, so Best Buy account debited to Scotiabank. So in this case, we will write here the Best Buy to Scotiabank. Okay, so Best Buy account debit to Scotiabank. This is the 16th transaction, and the payment is given like how much payment? $33,000 here. So $33,000 here, $33,000 here. So next we have the 17th journal entry. So this is for the service revenue. On February 25th, service revenue was generated, and $135,000, and the payment is not received yet. It means that we will receive this payment later on, right? Service is rendered, service is done, but we have not received money. We may receive this money later on. This is what is known as that current assets, because that we will receive that money within a short period of time, maybe 30 days or 60 days as per the agreement or from the supplier and the buyer. So now in this case, what will be the transaction? So in this case, we will write here. Now, so 17th transaction says account receivable to service revenue. Account receivable to service revenue. So in this case, I'm just going to write $135,000, and here $135,000 as well on the credit side. So in this question that we can see that, so there is no name of the party. When there is a no name of the party, then you can write only account receivable. If there is the name of the party, maybe XYZ, you can write XYZ account receivable. There is no any problem for that. So now the 18th transaction is saying that on April 8, company bought a car worth $10,000 on cash, and using the partial year's depreciation calculated to the nearest whole month. Use the double declining method to calculate the depreciation on 31st of December, and useful life of the asset is 10 years. So what is this mean? It means that exactly the same thing that I have explained here. As per the double declining method, we know the 1 divided by 10 into 100 into 2 is the 20%. That how to calculate and how to find out the percentage of depreciation here. So this is the 20% depreciation rate. So now we know that on April 8 that we bought a car. On 31st of December till there will be around 9 months. But we will not calculate the number of days like that we use less from 1 to 8. From the 9 to onwards, that 1 month that will be considered. So why this we are calculating? Because that we are using the partial year depreciation methods, right? Which is the nearest whole month. This is the name of the method, nearest whole month. So in this case, 9 months use of assets, when assets is used for more than half month, that will be considered as the 1 month, which I have already explained here. So now make a journal entry for the buying car. It means the first journal entry, and second journal entry that we will make for the depreciation as mentioned above, that will be $1,500. So 18 and 19 transaction that I'm just going to write it here. So 18 transaction is saying that we bought car. So car account debit. So what is the amount is $10,000 on the debit and as well as on the credit side. So cash to cash. So because the payment is made by cash, so $10,000 that we have entered here. So 19th general entry that will be depreciation is $1,500. So depreciation account debit $1,500 on the debit side as well as on the credit side, and accumulated depreciation we will write it here. So this is accumulated depreciation on car, right? So 19th transaction is already completed, right? So next we have a couple of entries remaining. The 20th transaction is office supplies purchased from the staple 1100 on credit. It means still that a payment is not made. This is also one of the current liabilities that the transactions that we will do. So office supplies account debit to account payable staple. So in this case, I'm just going to write office supplies account debit here. So amount is 1100, and here we will write account payable, and name of the company is the Staple, $1100. Okay, so 21st transaction that we are going to start now. So in the 21st transaction, you can see that salary is due 1590 but not paid till 31st of December. Means that the salary we will calculate only for 1 year, from the 1st of January to 31st of December. This is the accounting period. All the transactions related to the business that will be calculated, that should be recorded. It means $1,590 that was due. It means the worker or employee worked in the RJ Private Limited from the 1st of December till 31st of December, all 31 days. But amount is not deducted from the company. Company did not pay because it was not due. Normally it may be due maybe after a couple of days, maybe on 10th of January next year, maybe 5th of January next year, maybe the 1st of January next year. All means that we have not make any payment, means due but not paid. It means this also has become the liability of the company. So salary account debit to salary payable, that will be recorded 1590. So salary account debit to salary payable. So in this case, so salary is what? Salary is expenditure of the company. So salary here is expenditure of the company 1590. Expenses of this year should be recorded this year. This is known as matching concept. Okay, so salary account debit to salary payable. The next transaction is employer portion of EI 250 is due and considered as expense of the company. Yes, so employer portion of the EI, right? So what is that? EI is employment insurance. So due but not paid mean EI expenses account debit to EI payable. So in this case, EI expenses to EI payable. So what is the amount here? So amount here for this transaction is 100. So this one will be 22nd entry is at 250 on the debit side and 250 on the credit side. Now the next one is 23rd transaction. So 23rd transaction is related to the employer portion of CPP. Employer portion of CPP. So employer portion of CPP is saying that 120 is due and considered as expense of the company, right? So it means uh, what will the figure here? That will be the $120. This is also considered as expenses of the company. So 125, and here will be 125 for you as well. So what we will write here for the 23rd transaction, we will write here CPP expenses. So CPP expenses account debit to CPP payable. So when payable word we use, it means the liability. So the 23rd transaction is also completed. Now we have 24th transaction, which is saying cash sale of 10 laptop, like $6,000 with the PST. PST is the provincial sale tax, so 7%. That is the receipt. It means $6,000, 7% of 6,000, that will be 420. Whenever the company RJ Private Limited is going to sell something, right, they will receive not only $6,000, the selling price, but also the 420 as well. It means 6,420 will be received by RJ Private Limited in the form of maybe a cash or a bank, right? So here the cash sale means the cash is received. It means we will write here 6420 as a cash received. So first will be the cash account debit. Cash balance has increased in our company, so cash balance is 6420. So this is increased, and so now we are going to credit something. So what has gone from us? So something has gone, means the goods has gone and the value of the goods is 6,000 to sale. So sale will be of $6,000 here, right? Next, so here that we have received something, we have received the PST, the sale tax. So sale tax that we have received, definitely we will give this sale tax PST, provincial sale tax, to the government later on. So this is a payable, so we are going to write here payable. So PST payable, how much this is? This is 420. So the 24th transaction is completed. Next one is the 25th transaction. Record cost of sale. So what is the cost of sale here? $4,000 is the cost. And the transaction related to the 24. Inventory has gone down by this. So we are going to record it. So 4,000 is the cost of goods sold, right? And the inventory has gone down. So in this case, what we're going to write on 25th, I'm going to write here the cost of goods sold. In short form, I'm going to write COGS, cost of goods sold, and amount here is $4,000, and also debit and also credit here. So in this case, I'm going to write here to stock, or you can write here inventory, or you can write purchase as well. Whatever that you want, you can write, right? So 26th transaction is related to that, make a journal entry for the sale tax, like 420 is remitted. Remitted means paid next day by cash. So it means the one thing was due somewhere, you can see here, like 420 it was due, it was payable. Now in the 26th transaction it is paid. It means that that amount was credited, it has become our liability on that day, but now the liability is going to decrease. When the liability is going to decrease, we will write here PST payable, account debit. So how much that we will write? 420 here. And now we have paid by cash, so definitely the cash balance has gone down, so will be credit here. So now what I have completed, I have completed all the 26th transactions which is done by the RJ Private Limited in this year, and I have completed all the entries here. Now next is the simple process, how to put all these transactions in the ledger. This is also very important, right? So it will take around 5 to 10 minutes and it will be so quick. So ledger account here that I can find in the ledger. So you can see here I have created empty performer. So how to create empty performer, that is also available in the different videos that you can find on the video lectures. So for now, this is very simple. This formula that I have put it here, and this formula is the sum of from here to here, whatever the figures I will write, minus sum of from here to here, and automatically the answer will be here. For example, I just write $200, and here I write just 22. Automatically, this figure is coming. So when this figure is coming, so what I did in the trial balance, see, look at this, the cash is coming here automatically. How this is coming? What I did just a very simple process, is equal to sign here, go to ledger, click here and enter. So this is coming in the same way for all the balances. You can see there, like, look at this, see everything. So everything that I have done here, so I'm just going to take the balances from all the ledger account that I have created in the trial balance automatically. So whatever that the answer will be here, whatever the balance will be here, whether this is the debit balance or the credit balance, the everything will be settled here automatically. And one thing more, that from the trial balance to the profit and loss account, what I did in Microsoft Excel, that all the balances here, the trial balance, all the balances, like maybe the cash, for example, this is the cash balance. So we know the cash balance definitely will be in the cash here in the balance sheet. So what I did here, exactly the same thing, is equal to sign here, go to the trial balance, click here and press enter. So what it means? It means whatever the transactions from that, on the basis of the journal entry, whatever the transactions that you will be putting to the ledger here, all the transactions, and they will be reflecting automatically in the trial balance, and also it will automatically reflect in the profit and loss account and balance sheet, right? So we can say there are 5 boxes. So this is the expenditure box, this is the income box, and this is the assets box, and this is the liability box here. And the liabilities are here, outside the liability, and one is the owner's equity, or we can say the capital account here. So everything will be automatically done here just by putting a equal to sign. That's it. Now I'm just going to start with the first transaction, and quickly we are going to complete it. Once you will be able to see this thoroughly, accounting is very easy. And how to use Microsoft Excel is a powerful tool to integrate the one sheet with another one, another with the final one. So look at this, the ledger account here, the I have created cash, Scotia Bank, and you can see the green line. Green, I have filled this green because to know that this is the balance, right? If the debit side is more, credit side is loss, it means the debit balance. So normally we know the cash, Scotia Bank, these are the assets, leasehold improvement assets, amortization expenditure, all the assets, all the assets, whether current or fixed, doesn't matter, all the assets and all the expenditures that will have the debit balance. So that's why I have put all the assets and expenditure here on the left hand side, just for my understanding. I can mix it together, but for my convenience, what I have done, I have created all the ledger account in this format. On the right hand side, you can say the capital, which have credit balance, amortization, credit balance, receivable, right? So credit balance, it means all the income and the liabilities that we have. So we'll be having the credit balance here. All the incomes will be have the credit balance. Okay, so now the first transaction here is cash account debit to Scotia, cash account debit to RJ Capital. So how to do this one? This is very, very important. Some of the students may get confused in this. So how to put the particulars, how to put the detail, where to put the detail? Very simple rule. If I'm just going to explain the first one, and for rest of all 26th, that it means I am repeating once again and again, again and again. Same thing I will repeat it. Okay, so look at the first one now. So cash, we have a debit balance. Look at this. This is the debit 50,000 and this is cash. Go to cash, go to cash and write 50,000 on the debit side. I'm going to cash and I'm writing 50,000 here on the debit side. I can write it or I can put the equal to sign here and go here and click over here and enter. This is also one way that we can do. It's very simple. Why to write like manually, and whether we can write automatically. So better to go for automatically now this time, and it will save our time. So next will be so now what I did, cash $50,000, then I have written here, and automatically the total and balance is coming. The next is Scotia Bank, $340,000 on the debit side. Go to Scotia Bank and write here the 340,000. Okay, this is already done now. Now, next is go to the capital account and write a 390,000. I'm just going to, I have already created this capital account. This is the credit side is equal to, go to journal, click here 390,000 and press enter. It is coming automatically with the balance, everything. Now, the, the main thing is, this is what we have done. Debit on the debit side corresponding to the particular, corresponding to account. 50,000 debit side of the cash account, 340,000 on the debit side of the Scotia Bank, 390,000 on the credit side of the RJ capital account. But we cannot remain empty here. We need to write something. What to write? This is very important. Sometimes we get confused. So in the cash, we cannot write cash, first of all. In capital, we cannot write capital. In Scotia Bank, we cannot write Scotia Bank. But what to write? So in cash, we are going to write here cash. According to this one, we are going to write RJ capital account. So here RJ capital account. I'm just going to write here RJ capital account to RJ capital account, right? Okay. So now in RJ capital account, we will write cash. So in RJ capital account, we will write here cash. So on the right hand side, buy cash. This is that we have done for 50,000. And what about the 340,000? So Scotia Bank, 340,000. and we will write not in Scotiabank, we cannot write Scotiabank. So in Scotiabank we will write RJ Capital. In RJ Capital we write Scotiabank with this amount. Okay, how this happens? Scotiabank to RJ Capital. So RJ Capital here we write to RJ Capital once again, and here what is the amount? So amount here will be the 340. So I'm just going to click here is equal to and 340 here and enter. Okay, so RJ Capital. So in Scotiabank account debit to RJ Capital. In RJ Capital by Scotiabank. So here I'm just going to write by Scotiabank, and so here by Scotiabank, by Scotiabank. So what will be the amount here? We are going to write 340,000. Right, so 340,000 here. So the cash first was not 390, it was 50,000. Okay, so now this is right. So this is the first transaction that we have completed. Now the next transaction here is leasehold improvement to Scotiabank. So the leasehold improvement that we have here to Scotiabank. So what I'm going to do is equal to sign here, and even I'm just going to write a Scotiabank here. Yeah, this is coming, and also is equal to, and here I'm going to write 60,000. I'm not writing anything. Even this thing is also coming from the journal. So leasehold to Scotiabank. In Scotiabank, we will write by leasehold. So is equal to, here in the Scotiabank, we will write leasehold improvement, and also that I'm just going to write here the $60,000. So this is already done now. The next transaction is amortization to accumulated amortization improvement. So amortization 10,000. So where is amortization? Leasehold improvement is there, and amortization expenses. So amortization expenditure is equal to sign here. So this is amortization expenditure to, because whatever that we are working in that account, we will not write that same account, same wording. We will write the different, just to understand why this amount is there. This amount is there only because of this, right? And so this is accumulated. If this is big one, we can make it, we can write it by manually. So here is amortization to accumulated amortization leasehold. So to accumulated amortization of leasehold improvement, right? So what is the amount here? So amount here is $10,000, and so in amortization we will write amortization expenses. So what is accumulated amortization here? Accumulated amortization. So here we will write by amortization. By what we will write? We will write here amortization expenses. And what is the amount here? So we will write exactly the same way, is equal to the transaction number 3, this one. So this is the third journal entry that we have completed. Now the fourth one, painting and building repair to cash 3,500. So painting, so I have created one account, painting account debit to cash. How much is the amount? Painting account debit to cash 3,500, and in cash we will write by painting. So what is that? Painting and building repair 3,500. So painting and building repair. So what is the amount here? So here that I'm just going to write amount as well. So 3,500. The fourth transaction is done. Now the fifth transaction is the rent of the building to Scotiabank 24,000. Rent of the building to Scotiabank. So where is the rent of the building as the expenditure to Scotiabank? Okay, so amount here is rent of the building 24,000, and Scotiabank we will write a rent of building. So Scotiabank by rent of building. right? So here is equal to sign here, go to journal, transaction number 5, Scotiabank, 24,000. Now the sixth transaction we have here. So exactly what I'm doing, I'm just repeating everything again and again. Sometimes you miss something in the previous transactions, you can understand in the next transaction if you're not getting right. So slowly that you will be getting slowly that where should all these figures should go and where these narrations that will go means detail. So truck account debit to Scotiabank, 35,000. So truck account is here already created. So truck account debit to Scotiabank. So amount here is as per the sixth transaction 35,000, and in Scotiabank buy truck, right? Here buy truck, right? So here is equal to sign, go to journal, and I'm just going to write here 35,000 in front of the Scotiabank here. Now the seventh transaction is the furniture account debit to cash 15,000. So furniture account here is furniture account debit to cash. So furniture account debit to cash 15,000. Okay, so here I'm just going to put is equal to sign here, and 15,000 in front of the furniture is 15,000. Press enter, and in cash go to cash now. In cash account buy furniture. So buy furniture is equal to sign here transaction here number 7. So $15,000. So this is already done. Next transaction number 8. So transaction 8 number saying photocopier machine to Scotiabank 75,000. So photocopier machine account, let me see that photocopier machine that I have created, or it may be only the machine. So photocopier machine is there, right? So here what I'm going to do, I'm just going to write here photocopier to Scotiabank. So Scotiabank 75,000 to Scotiabank is equal to sign here, and photocopier machine that we are working under this one, so 75,000, and go to Scotiabank buy, go to Scotiabank buy photocopier machine. So what is the amount here? Then go to here cash photocopier machines count debit photocopier machine to Scotiabank 75,000. I think yeah. So I have done wrong here. No need, because this is cash and this is bank. So I need to write it here. Buy photocopier machine, because that money is paid by check, not by cash. So is equal to sign here, and then go to the Scotiabank here $75,000. Transaction number 8 is done. Now the transaction number 9 is in machine to Scotiabank 55,000. Let's see, the machine account is here. So in this case we can see that photocopier and machinery, yeah. So machinery is also there. So machine account debit to Scotiabank once again 55,000. So here to Scotiabank. So Scotiabank here I'm just going to write here machine to Scotiabank 55,000, and go to Scotiabank write machinery. So go to Scotiabank write machinery with 55,000. So I'm going to Scotiabank. I'm going to Scotiabank here on the other side by machinery, and what is amount? I'm just going to take amount from the journal entry here. So now the transaction number 9 is also completed. Repair of machinery to Scotiabank. So repair and maintenance. So repair and maintenance to Scotiabank 500. Repair and maintenance is expenditure of the company. So repair and maintenance you can see here. Yeah. So repair and maintenance account debit to Scotiabank, and is equal to sign here. Go to repair and machine and 500, and in the Scotiabank we write here in Scotiabank we will write repair and maintenance. Go to Scotiabank account by repair and maintenance. Okay, so it's equal to sign here, and the transaction number 10 says the $500. Now the 11th transaction is repair and maintenance to Scotiabank one time more. So repair and maintenance exactly same way $7,000. repair and maintenance to Scotia Bank. Okay, so I'm just going to copy this one here, and here in the journal, repair and maintenance to Scotia Bank 7,000, and go to Scotia Bank once again. This is Scotia Bank, and by repair and maintenance here is equal to sign, go to the journal, and we'll write $7,000. Now 11th transaction is done. Next is the 12th transactions, machine to Scotia Bank 20,000. Go to machine to Scotia Bank. So here we will find here machine to Scotia Bank. So this is how much is this amount? This is a $20,000. And in the Scotia Bank, you will write buy machine in Scotia Bank. Yeah, you write here buy machine. So how much is that? Is equal to sign. Go here and write here 20,000. Now next is the purchase. So purchase account debited to Scotia Bank 9,500. So go to purchase account, purchase to Scotia Bank. Yeah, purchase here to Scotia Bank. Yeah, purchase to Scotia Bank is equal to sign here, and it's 9,500. And in the Scotia Bank, you will write by purchase. Yeah, here by purchase. So by purchase is equal to sign. The transaction here is purchase 9,500. Now 14th transaction is that the purchase account debit to cash. So here purchase account debit to cash 1,500. So go to purchase account and write cash. Purchase account, yes, to cash. So how much is a 1,500? You can write purchase here 1,500, and in cash you write by purchase. In cash you write by purchase. So here I'm just going to select it from here, purchase account debit to cash. So this transaction is done. Next is the purchase account debit to Best Buy account payable 70,000. So purchase account debit to Best Buy account payable. Let's see, purchase account debit here, right? So what is written here? Best Buy accounts payable. So to Best Buy, comma, accounts payable, or you can write accounts payable Best Buy, whatever is convenient for you. So next is what is the amount here? $70,000 in the purchase, and the second is the Best Buy account payable 70,000. So Best Buy is here. So here that what I'm going to write here is account payable 33,000. Best Buy. So purchase account debit to Best Buy account payable $70,000. So account payable, it is written account payable 70,000 by purchase. So here I'm just going to select from this figure account payable, but I have received a receivable, so I'm just going to make it payable, right? So this transaction is done. Now the next transaction is the 33,000 Best Buy account payable to Scotiabank. So Best Buy account payable, go to Best Buy account payable and write $33,000 on the debit side. I'm going to the Best Buy account payable and writing $33,000 on the debit side here. Debit one should be on the debit side. And here what I'm going to write here, so Best Buy to Scotiabank. So here I'm going to write Scotiabank to Scotiabank. In Scotiabank, we will reverse it. Go to Scotiabank now. Go to Scotiabank and write. Go to Scotiabank and write Best Buy account payable, right? $33,000. So let's see where is Scotia Bank, Best Buy. So Best Buy to Scotia, and in Scotia by Best Buy, and amount will be 33,000. Now next one is account receivable. So in this, see that you can see the trial balance. Trial balance is already created. See, the trial balance is also the figures from the ledger is coming to the trial balance, and from the trial balance to the profit and loss count, because that we have created the performa, right? So automatically this is coming. So I have just written all the assets on the asset side, the liability on the liability side, equity on the equity side, here expenditure on the expenditure side, and income on the income side. That even that at the starting you can do it. At the time of creating ledger, you can make a trial balance and profit and loss count at the beginning as well. Just create a pro forma, and whatever that you will do your transaction here in the ledger automatically will be reflecting here and here. So that will be very easy for making all these transactions. So now next we have here account receivable to service revenue 135,000. So account receivable to service revenue. Okay, so account receivable, let's see where it is. Purchase account receivable. So account receivable to service revenue here. To service revenue. Okay, so is equal to sign here. Account receivable to service revenue $135,000. Go to service revenue and write by account receivable. Here by account receivable, and here the amount should be this one. Next, car account debit to cash $10,000. So car account debit, so car account is already created here. Car account debit to cash, this is $10,000. Car account debit to cash 10,000. So what you can do, you can put is equal to sign here and go there and $10,000 here. And in cash, by car. In cash, by car. So car is purchased by cash, so here you are writing car, and what is the amount that will be here? $10,000. Next is the 19th transaction, depreciation to accumulated depreciation on car 1500. So depreciation, yeah, so this is the depreciation. So depreciation to accumulated depreciation on car, right? So here the amount is depreciation to accumulated depreciation on car 1500, and under accumulated depreciation on car by depreciation, accumulated depreciation on car by depreciation. So the amount will be exactly the same, accumulated depreciation 1500. So I can write it 1500 here, or I can click the equal to sign, and like this I can do that. So now this transaction is already done. Now officer supplies to account payable stable 1100. Officer supplies to account payable. Where is office supplies to account payable? Accounts payable stable. So what is the amount here for the officer supplies is also our current assets. So $1100 that we put it here. Account payable stable is the liability, right? So that I am just writing here account payable by officer supplies. Account payable. So by officer supplies. So here, what is the amount under account payable staple? So account payable staple is here, and I'm just clicking this one. The next one is the salary account debit to salary payable. Okay, so salary the expenditure of the company will be on the debit side here. So salary, okay, so we have salary. So salary account debit to salary payable, due but not paid, right? So salary account debit to salary payable, and here is equal to sign, and this is the amount that we have here. Next is salary payable. Now the to make a double effect, this is the one thing on the debit side, and credit side we will write under salary payable. So go to salary payable. Salary payable is, yeah, so salary payable. So here what I'm going to write, I'm going to write here by salary. So what is the amount? Exactly the same amount which we debited. So salary payable is 1599. So this transaction is also done. EI expenses 250. So EI is the expenditure 250. Let's see EI. EI expenses 250. I can write 250 here manually and go EI to EI payable. So here to EI payable, right? So in EI payable by EI expenses by EI expenses and 250, right here. Next, we have 125 CP expenses to CPP payable. So CPP expenses to CPP payable is the liability, and here 125. Let's use 125. Yes. So in the CPP payable that you will write here by CPP expenses. So 125, right? Next we have here CPP expenses is done. Cash to sale to PST payable. So under cash we will write these two. I'm just going to copy cash. Under the cash I'm just going to write these two. To sale to PST payable. So what is the amount for that? 6,420. So here I'm going to write the 6,000 and here 420, right? So in sales we will write cash. So where is the sale? In sale we will write cash. Sales. Okay, right. So in this case, go once again. Yeah, cash account debit to sale. In sale we will write 6,000 and PST payable. So sale, this is what, this is the laptop. So here what I have written laptop sale. So here what we will write, we will write buy cash 6,000. So here buy cash $6,000. Next is CPP pay, sorry, PST payable 420. So PST payable 420. Okay, so now what we have done, we have received cash. So in PST payable by cash, we have received cash from the client, and that cash we will pay to the government. PST payable. Now next we have here 25th, cost of goods sold to inventory $4,000. So cost of goods sold to inventory, so that will be here $4,000, and in inventory by cost of goods sold. Inventory is also assets, so it should be here inventory or some stock. So let me see if I have created purchase, maintenance, PST, laptop sale, API, accounts payable, accumulated service revenue, best buy, stock, or there may be one purchase. You can write in the purchase. If there is a purchase has gone down, so we can put under the purchase as well. Okay, so I think the purchase should be here. Cash, leasehold, amortization, rent of the building, truck, furniture, photocopier, machinery, repair, purchase. Yes, here we can write. So this is purchase, cost of goods sold to purchase. In purchase we will write cost of goods sold 4,000. So by the cost of goods sold, so here is the 4,000, right? So next, this is the last one, PST payable to cash. So PST payable to cash. PST payable is the liability, so it should be here. PST payable to cash. So to cash. So it means like $400 that was due, but now $400 that is paid. 420, right? So zero is the balance here. So PST to cash. In cash, we will write it by PST. So that will be here 420. Okay, so look at the trial balance here. So trial balance is not matching. There is something wrong. And if the trial balance is not matching, it means other things will not be matching here. So it means there is something wrong, and there may be in the transactions. Let me see what it is. It may be related to the cash something. So just to hold on. In the cash, this is what 340, and we can see that here it should not be here. RJ's capital, cash account debit to RJ capital 340. Let me see here in the journal. Go up, cash account debit 50,000 to RJ capital. Oh, like, so it should be only this one. We have just written double, so no need to write. Now that's okay. It's matching now. 582565, just only one entry, it was not matching, but now this is matching. So look at the beauty of Microsoft Excel and accounting. So in the profit and loss account, you see that the profit here is you can see the profit is also like you can see the profit 11,535 is the profit is coming. And also if you see here, look at this, that on the current assets that I have divided like this, the fixed asset this one, and the total, this is the fixed assets plus current assets, this is current assets plus fixed assets is equal to 44 1600, means 441,600. Both assets and liabilities are matching here, so everything is done. Now how to interpret it? Interpretation means, look at this, only one thing I am going to interpret it. It's very very important. We see that this is the cash account. Why all these balances are here? Why we have created all these ledger account? We know that the cash inflow is that $50,000 cash has come in the business, 6,000 also coming by sale, and PST that we receive from the client. Total we have received 56,420. Then we made some expenditure like painting and building expenditure by cash. Furniture we bought by cash. Cash has gone down 1,500 for purchase. Car we bought 10,000, and PST that which was due and also paid by cash. So this is the remaining amount available in our business. So that's why we create all these ledger account. And also RJ capital account, the how the capital has increased, why this balance is coming, and how this balance is coming, this is very important. And to know this one, we need to create all these T form of accounting ledger account. Look at this, the company, the owner of the business has brought us $50,000 cash in the business, and the bank balance is $340,000. The total is $390,000 he has brought. Scotia Bank, I'm not going to explain everything, but this is the last one. $340,000, you can see here the relationship between everything. $340,000, the RJ Capital, the owner of the business, has brought. So $340,000, the Scotia Bank balance has gone up. So here I need to write to RJ Capital account. Right, so it shows that in the bank at the beginning of the company, $340,000 that was there in the bank. So from the bank all these expenses were done, all these expenses, and remaining amount is 21,000. So same remaining amount that we can see in the balance sheet, look at this, 21,000. And same the cash account is here, $26,000. Exactly the same thing from the trial balance to the profit and loss account. So this is how we can interpret it and evaluate everything that is correctly done or not, right? So this is the beauty of Microsoft Excel, as well as that I have completed all the transaction, all the most important transaction that we use in accounting.